So today I'm going to talk about a new stock that I have bought. I don't normally buy too many new stocks into my portfolio every year. I would say around about maybe 4 or 5, unless something crazy happens in that year, which, to be fair, we've had a few crazy years in the stock market in the last couple of years, so that rule's been broken a little bit. But yeah, it's quite rare for me to buy a new stock. I would only say a couple a year, and today is one of those days where I go buy a new stock. Now, this new stock is a UK company. It's a high growth UK company that is also profitable, but I'm going to say it's a little bit more of a higher risk company, just because for me it's going into an industry that I'm not too confident with, and there's also one or two things that I would like to see them improve for me to then commit to it be a bigger position. So hope you enjoyed this video anyway, guys. If you could hit the like button if you're new around here, subscribe, and we'll get started. Now, you guys on the Patreon know that I've been owning this stock now for the last couple of weeks, so it's not as such as a surprise to you guys, but it's the first time I talk about this on the YouTube channel. So if you do want to know what I'm buying and selling in real time, the place to be is on the Patreon. And actually this week I might actually buy another UK new company that I don't own this week actually. So yeah, but the company I bought is a company called Alphawave Semi. So it used to be called Alphawave IP. They've actually just recently changed the name. It was founded in 2017, so this is actually quite a new company. So this company has made a lot of progress to say it's 5 years old when you look at the financials and the numbers that they're putting in and the profit they're putting in as well. Really impressive. The only company that I've seen that's really moved this quick before is HIMS, and you guys know that I'm a massive fan of HIMS. Now, it's on the London Stock Exchange. We don't really get too many high growth UK companies on here, so this is a really exciting addition. It's quite a decent sized company. It's a 678 million market cap company, and it currently trades at 36 times earnings, as you can see here. Now, it IPO'd in 2021, and you can see since it IPO'd in 2021 it came on at £3.80, and since that time it's had a bit of a rough ride, and obviously has joined in. We'll talk about why this drop happened in a few minutes actually, but since then it's been just really caught up in the bear market, and then that helped it go 50% lower. But now at 36 times earnings at a 96p stock, I think this is where it's worth me taking a bit of a buy into this one. Now, what Alphawave does is they do silicon IP, chiplets, custom silicon, and connectivity products. Now, for me personally, I've always wanted to get into the semiconductor space. It's a industry that I'm not too knowledgeable in, and that's why I'm keeping this position small, just because I don't have great knowledge in this sector and I don't know very much about what's moving further forward, competition and everything like that that potentially could affect the market. But I've always wanted to have a semiconductor in the portfolio some way, and I thought that this would be a very good addition to the portfolio, considering when you look at semiconductors in the next few years, from 2022 to 2029, the industry is going to move from 573 billion up to 1,380 as well, which is absolutely crazy. Now, the company isn't directly involved in actual semiconductors. They actually provide how the data is transmitted between other devices. So they are making sure that that semiconductor, for example, transfers the data quicker and also saves power than what is already out there. So they actually don't really develop too many actual physical products. All they're doing is producing the products and solution and then selling on that product to someone, say like an Intel, for example. And that's the big thing that Alpha Semi do differently. This is the little gap that they're filling in, that the companies like Intel or Samsung, for example, aren't really focusing on, because they're too busy making other products. That they fill in this little gap here that's really being taken up by Alphawave, and they're doing very well from it, and that's what's led a lot of semiconductors to use their solutions, because of how quick or how far advanced their products are, and also how fast they're transferring data. And you can see here they're currently leading the connectivity IP in silicon, and you can see that this is the products that are used by Taiwan Semiconductors, Samsung and Intel. They've got the custom silicon, which is bespoke silicon to customers' requirements, incorporating their connectivity IP, which they have currently 80 active customers. And they also have their connectivity products, which is high bandwidth, advanced node, optical and electrical networking products. And you can see here some of the products that they currently have. Now you also be able to see that Taiwan Semiconductors have currently had them as their OIP partner from 2020 to 2022. They also, Samsung gave them the Best Collaboration Award as well, which is very impressive. And you can see some of the products that they're building up here. And from 2020, you can see the number of IPs that they've been building up, where they're now at over 220. And you can see here some of the partners and some of the other offerings they've been offering through the lifetime since this company was created. And the plan going forward for Alphawave is to carry on scaling the team, also to still be the technology leadership product and keep expanding new products, land and expand, so winning new customers, so the likes of Taiwan Semiconductors, for example, and then expanding as well some of the products that they're currently offering to them. Obviously expand globally. They've also introduced now a subscription and royalty revenue stream, which is doing very well. And also if they can expand as well into the chiplet market as well, that should help them, and that's through one of the acquisitions recently they made, which is Open5. And you'll be able to see that previously a lot of this business model was done on the product IP and licensing, and now you see the build up through royalties, and also now the introduction going forward of chiplets as well should really help the income for this business. And going forward, they have a good view on what bookings they have going forward, and these are current bookings, and you'll be able to see the breakdown of some of the revenue and bookings, and you'll see that in the last quarter they won 8 new design wins in Q4. So that's obviously the semiconductor companies introducing their product into their designs. And you can see now that they're currently now working with 7 of the top 10 semiconductor device companies. Now, only a few months ago, this was 6. So now they are working with 7 of the 10 top semiconductor companies out there, which is obviously really good. And this is Alphawave's projection of how much this growth is going to be in these sort of industries. The more that these semiconductors are used, the quicker they need to send data. Obviously a massive growing industry. You've got the streaming services, artificial intelligence, social media, e-commerce, VR, cloud services, 5G networks, a massive one. And you can see the market growth of how much data is going to be sent is massively going to increase in the next few years. So clearly you can see at the moment Alphawave have very exciting plans going forward as they partner with more and more of the top semiconductor companies out there. And previously that's led to them on before an IPO basis. You can see here in 2018, 2019 and into 2020, you can see here that the revenue has grown absolutely amazing since they were founded in 2017. You'll also be able to see, because they don't really manufacture products as such, you can see here that they have a massive amount of profit as well. And looking into what the future holds for Alphawave, well, they've got quite a good vision because of the bookings that they're currently having at the moment. But you can see here, these are the next targets they have for the next 2 years. So you can see at the moment they're expecting revenues to be from 340 to 360 million, and in 2025 they expect that to grow to 500 million. You see gross margins are around about 60%, and you can see here they're trying to get to adjusted EBITDA of around about 150 million. And when you look at that, when it's a company that is a 678 million market cap, and you've got them growth targets, obviously it looks pretty good from a financial point of view at the moment. And I'm also quite a big fan of the management team. I listened to their Capital Markets Day and I was pretty impressed. It's worth watching. It's about 3 hours long and there was a lot of good information in there. And Tony, who is the co-founder and the CEO of Alphawave, also who is leading this company, I can see why they're able to produce so many good financial results at the moment and have major client wins and also solve problems that a lot of these semiconductor companies have at the moment. And that's because when you look at his experience in this space, that's how well they're able to serve a lot of the semiconductors in here. So you can see here, he co-founded Alphawave in 2017, which we mentioned before. You can see that he has co-founded 3 semiconductor IP companies, including Snowbush, Microelectronics, which was sold in 2007, and also he founded V Semiconductor Inc., where he served the president and CEO, and that was acquired by Intel in 2012, as well as being working at Intel for 5 years and having a company that's acquired by Intel as well. You can see here he has a very good history in this space, good knowledge, working at somewhere like Intel before leaving in 2017 and having a previous company as well acquired by Intel obviously is very, very good as well. So when you look at management team and who's running your company day to day, this is the sort of person that I would want to be investing in. So going back to the share price, obviously you can see here they've got exciting products coming forward. You look at the execution they've had on the financials, you look at the management team that's currently running this business. So why is the stock gone from £3.80 down to 96p? Well, first of all, a classic IPO, it's probably overvalued, the old saying for an IPO. And I think that was the case. It was probably a little bit of a rich valuation in 2021. Now, there was a bit of a short report that we're going to talk about here that caused this to go down here. And then I think the rest of it is just the negative market that we've been in through 2022. So I think you had a very high valuation, a bear market pushing it down, and then the third thing, which is the short report. So we'll go on to the short report that was out here. So the short report was actually from Financial Times, which is something that you don't really see from someone like that to be giving such a strong opinion about a company. So the first question is, why did Alphawave pick to list on the London Stock Exchange rather than its home turf of Toronto or Canada or New York? The reason why they said it is because they wanted to list on this market because they felt like there was a gap on the London Stock Exchange. There used to be a company very similar that was called ARM, but that was actually bought by SoftBank, and then actually SoftBank and Nvidia actually tried to buy the company off SoftBank, which then didn't go through. And then actually now recently there's potential rumours that they could be actually IPOing ARM at some point. So there was a very good company on the UK markets previously that was a bit similar, but it was bought out. And then what happened is Alphawave thought, okay, we'll go in this gap here that was created now by ARM, and hopefully we fill in the gap and we attract some of the old ARM investors into our company. Now, potentially that was a clever idea. The only issue is that we don't normally get so many good growth stocks onto the UK market, so everyone automatically looked at it at that point of view and went, that's really weird. And it's bad that we look at that point of view and thinking, why is a good growth company coming to the UK? You know, and then it comes to the UK and then it gets a short report. It's a bit funny how that all works out. But unfortunately that drew some suspicion there, and also because there was some questionable ownership in there. People are feeling like because the scrutiny over accounts are a little bit less than if they were on the New York Stock Exchange, that also played into the factor there. So that was one issue that was created by the listing onto the London Stock Exchange. Now, the strange ownership that people didn't like, and this is why people thought they were trying to get around something, is you'll see here the other group's chair and the co-founder, John Lofton Holt, is also the chair and founder of another semiconductor called Atronics. The privately held California business has been a major customer of Alphawave in the last 12 months. To May 2019, 90% of the Alphawave's 6.9 million revenue came from a company which a director is chair of the board. So people looking and thinking, okay, the major client is another owner inside the business. You can see why that looks suspicious. However, nowadays it's not as big of an issue because since this time frame, Alphawave has gone to sign major clients like Intel, Samsung, Taiwan Semiconductors, and like I showed you earlier, they've got 7 of the 10 largest semiconductor producers out there now. So that's not really a big issue nowadays, I would say, because you must have a good product for them major semiconductor companies to be now using your product. So I think that's kind of being pushed out a little bit, but I can understand why this was a bit of an issue at the time. And there was also an issue around another founder, which they signed a 54 million reseller and subscription deal with VeriSilicon, and also that was founded by Wayne Day in 2001. Day's sister, Welly Day, I think that's how you say it, is the co-founder of 52 Billion Marvel. And there was an issue in Marvel where basically 2 of the investors that are currently in Alphawave were removed from their management positions at the company after an audit committee discovered issues with revenue recognition. The SEC then later charged Marvel over these misleading disclosures, and they were also fined. And you can see here they currently have ownership. So obviously because these 2 people had involvement into an issue at that company, obviously that is kind of like, oh, are they kind of still doing something dodgy inside Alphawave at the moment, and that issue's there. And I would say this is an issue that still does concern me, is that you do have someone involved in the business that does have a bit of a checkered past. I have to say that is one of the concerns why I have limited it to a smaller position. But I think the other issue is resolved now because they have signed so many major clients in a semiconductor space. And the other thing that made me a little bit more happy from when this Financial Times posted this negative article on this stock, which was quite a while ago. As you can see here, this was in September 29, 21, is the company has made so much progress since this time frame. If there was something going on inside the business that was a little bit dodgy, I don't understand why so many insiders are buying shares. I generally don't think I can fit them all on the screen, the insiders that have been buying shares recently at the moment. But you can see here, there was, nearly 13 million bought, nearly 1 million bought, nearly 500,000 bought there. So the insiders are loading up on shares, and you can see most of the business is made up by founders inside of the business. So I don't understand, if it's a company that is doing something incorrect, why insiders would be willing to A, still hold their shares even after the lockup period, and B, why would you increase your stake if this company is not doing things correctly. And I think also, like I said earlier with the other issue, is that clearly they're having a good product. If you've got 7 of the top 10 semiconductor companies out here using new products, and it's the likes of Intel, Samsung, Taiwan Semiconductors, I think you're a serious business here. So yeah, I like that it's a founder-led company. I like how they all have big skin in the game, and they're also increasing the stake inside the business. Financial health-wise, it's absolutely clean. No debt on there. They are sitting on 451 million in cash, and that's correct. So you have a company here that is 671 million in market cap, and the cash balance is 451 million. Yeah, it's absolutely crazy. You got the company's nearly 2/3 of its market cap on cash. If I were them, I would 100% be looking at buying back shares at the moment. I'd be announcing a 50 million buyback 100% sometime very soon. And also the reason why they've got a good strong balance sheet is because obviously the IPO'd, so that generated so much cash for them. And also, like we said earlier, they have high gross margins. You can see here the gross margins are nearly 95% at the moment, because they currently don't manufacture that many products themselves. So the gross margins are extremely high. That's meaning on the financial, that obviously the revenue is growing amazing, but also the profit they're generating is so high, and a lot of that is going straight down to the balance sheet. So you've got a company doing absolutely amazing. They're growing new bookings at 272%. They've now introduced the royalties and silicon orders, which is another income stream, and you can see here the license and NRE is currently growing 90% as well, which is absolutely fantastic. So you can see why I'm excited about this one. Great balance sheet, good revenue growth, good profit growth, decent valuation, down at 36 times earnings, I believe. And especially when you factor in if they can hit these targets that they've set out, which you look at the previous execution, which has been amazing. If they get into 500 million in 2025 with 60% gross margins and nearly 150 million in EBITDA, and you talk about a company down here at 678 million market cap, obviously I think this is why it's probably worth to take the opportunity, especially when you look at someone like Tony, who has had such an amazing pass as well. I would probably back him to execute once again, like how he's done on previous companies. The only one little issue that I don't like about this company is sometimes they can be a little bit sly about hiding things. So for example, on their recent trading update, they did say that they are going to reduce their profit. You wouldn't have known because they just stuck it in here, this one line in the outlook, which I thought was a little bit like, if you're going to reduce your outlook on a profit point of view, you need to be a little bit more honest about that. I didn't like how they did that. Just be honest to the market that you are looking to have less profitability this year. And that's another thing why I'm keeping it a little bit of a smaller position, because if they do things like that, then that's how you lose a little bit of trust with them. So that's also another thing that I would like them to improve a little bit for me to get a little bit more confident into the business to make it a bigger position. So overall, you can probably see from the execution and the future plans, you can see why I'm quite excited to get in this from a financial point of view. Like I said, it's a bit of a higher risk stock, so I'm keeping it probably my smallest UK position, maybe my second smallest, just above Flutter, just because I never was able to build Flutter into a big position. Obviously the few issues that I'd like them to deal with is to see them continue to execute and to see a little bit more honesty in the financials, and then I might be a little bit more happy to commit a bit of a bigger position to it. And also I've got to take into consideration, I'm not the best in this space. I don't have too much knowledge in this space, so I've just got to be a bit more reliant on the company delivering on the financials like it has done previously. But you can see here, I think that when you look at the valuation, the future plans for this company and how it's done previously, it's quite an exciting UK growth company at the moment as well, especially when you look at how it delivers on revenue growth and the profit growth as well. So yeah, hope you enjoyed the video anyway, guys. If you could hit the like button, if you're new around here, subscribe. If you do want to buy some shares in Alphawave, I'm currently buying them on Trading 212. So if you want to join Trading 212, use the link in the description. Join through that link. You could get a share worth up to £100. So give that a go if you want, and I'll see you in a bit.